Righty-ho, we've got lots of you hiding in the shadows. We have some guests with us this morning as well, just to tell you how this works. We're going to show you what we're looking to trade this week and why, using our different strategies. We also have questions all the way through, so if you have a question, then please ask as we go along, or we can have a Q&A at the end. Tricky week this week with it being FOMC on Wednesday, so we may have to wait until after that before we catch some decent trades. But say it's a good day today. If you've got any questions, then ask. Morning, Agota says, good morning, Agota. I'm not sure if that's a Spanish name or what name that is. Morning, Maya. Morning to you. Kobina from Canada. Nita. Hi, Nita. I found John. Is John in from Brisbane? John F, I believe it is. Hi, Samir from Auckland. Richard in Somerset in the UK. Righty-ho, as ever, we have a global mix, as I say. Morning, who else we got? Pat says good morning as well. Right, we're going to go over to Pierre in South Africa first because the South African electric company are randomly turning the electric off there. I think it was off, how many hours was it off for yesterday, Pierre?
Yesterday we were quite lucky, only twice. First one was between 2 o'clock in the afternoon till 4:30, and from 10 o'clock till 12 last night.
Oh, only 4 hours yesterday then. Oh, that's okay. Apparently though it may go...
Weekend we were down 3 times, 2.5 hours each. So we lost on Saturday and Sunday 8 hours a day. Hectic.
Dear me. Okay.
So
well,
we are having lots of barbecues because the food is defrosting.
Oh dear. Samir says, explain in detail how to trade pullbacks. Yep, I will cover that when we get to my section. And for those of you who are new, Pierre's going to show you what trades he's looking for using his earth and sky strategy. He has some strange expressions for things that he will explain. The mother-in-law, what's the mother-in-law? Oh, mother-in-law is the 200 EMA. Dining room table, I can't remember the dining room table. You explain all that. Good morning, Bernard. Sister the A-team. Bernard, Belgian gentleman in the UK still, I'm guessing. Right, Pierre, off you go. Take it away. Okay,
cool stuff. Good morning, everyone. Yeah, as Mark said, it's a bit of a tricky week. I've got a different platform open with about 30 odd pairs, and just browsing through it this morning, there's nothing that really stands out for me. There's probably about 3 or 4 currency pairs that's starting to look interesting, but the rest of it pretty much dull. So let's start off with the Euro-US dollar. Mark mentioned there's a couple of new people here today, some people that's also visiting. So what I'm going to do is I'm going to start off with the Euro-US dollar. Guys, if you're not familiar with Earth and Sky, go to the Education tab. There is Earth and Sky and Mark's M2 method as well. Start off with the Earth and Sky because there's a PDF file for you. It's more systematic, I think, than Mark's. Once you've got the basics going for Earth and Sky, I think it will be easier then to understand Mark's way, how he trades M2. Now, starting off with the Euro US dollar this morning, this is my Earth and Sky template. What I like to see, or what I prefer, is the 55s and the 200 EMAs on the 4-hour and the daily. My main chart for me is the 4-hour and the daily. Most of the time I spent on the 4-hour. Now, for the older guys that's in the not the people that are visiting today, but the guys that's been in this for a while, I'm going to ask some of you a quick question here so that we can all learn together, so that you can all see what I'm doing. As I said, that this is my Earth and Sky trading system. There's my dogs. This is what's so nice of trading from home, because I've got 2 spaniels lying here the whole freaking day here at my feet until you start a webinar. Okay, let's start off with the Euro-US dollar. Can somebody tell me where do I start when I look at this chart? If you can drop me a note there in the box, just tell me what's the first step if I look at the chart. Where do we need to start? We need to start somewhere to get a bias for the week. Where can we start? And everybody move to the back of the class. Okay. Somebody said we need to look at the direction indicator. Some of you said that we need to look for longs or short. The trend indicator, check the indicators, daily and 4-hour. Clifford said coffee. Well done. Trend is mixed. Previous weeks are high and low. Okay, guys, for me, where we start is the direction indicator. The direction indicator will give us a bias. Now, what I like is the 34, or this indicator will tell you if the 34 is above or underneath the 55, and if price is underneath the 200. If we look at the direction indicator, we can see that it's stacked to go long. We've got two green lights here. So price 34 is above 55 plus price is above the 200 EMA. Now, looking at the daily one, we can see we still stacked to go short. So we need to look for areas where we want to short if we want to trade with the main trend. So now we can't flip the 4 hour. We have to flip the daily for a short zone. Now I flip a little bit different. I only look at the previous. If I look now at the direction indicator, it tells me to look at the daily. We need to flip the daily for a short zone. So I will only flip the previous month. So I will not flip from that high. I will flip from the previous month's high to the low to get an Earth and Sky short zone. Now, if we quickly have a look at this, then we can see our Earth and Sky short zone is in this area. Now, for me, the short zone will be between 1.1332 and 1.1410. That is the area where I want to short. Now, remember, we look for multiple reasons. So we've got an area of interest. So now let's have a look in that area for possible areas where price can slow down. Can somebody call me a couple of levels here in the Earth and Sky trading zone, please? Give me a couple of areas where price might have a 14.0 monthly pivot point at 1364, 62.5 FIP and a 75% FIP. That's right, Clinton, Nick, Lisa, well done, and Jack, 1377. Now let's have a look quickly. What can we spot in this area, in this Earth and Sky trading zone? Well, for starters, our first roadblock is the 34 and the 55. Remember, the 55 is important for me. So the 55 is at 1349. You can see prices busy breaking that now to the upside. Next area of interest, 1364. We've got a pivot point there. And slightly higher up, we've got also the psychological here at 1400. Okay, if we look to the left of the chart, we can see that was previous resistance. That can stay resistance here. Okay, so price is busy pulling into that Earth and Sky trading zone. Now, once we are established possible areas of interest, what do we need to do now? We have to go and look and see how it looks on the 4 hour. On the 4 hour, we can see we broke the 200 EMA, but I can spot something immediately here that can be telltale signs that there's a possible correction coming up. Can somebody tell me what you can spot? Have a look at what price is doing and have a look at what MACD is doing. Bernard, MACD divergence. Pat, well done. Lisa, stochastic and divergence. That's right. Okay, cool. Well done, guys. Well, if we look at price, just purely at price, we can see price is making new higher highs, but MACD is telling us something else. That is making lower lows here. We can also see stochastic is overbought. So that is early warning sign that there is a possible correction coming. Remember, we're now in the Earth and Sky short zone. We can also see that there's a weekly first resistance pivot point. So now we drop to the 1 hour chart. Okay, so price is in the Earth and Sky trading zone. And if we quickly place that on a line chart, what we can do is place a trend line in here. And now we need to wait for this trend line to break if you want to trade with confirmation. Now, the reason why I like confirmation is you can have two types here now on this chart. One, you can either use the trend line break, where price breaks the trend line, close on the other side of the trend line, and then the short. Or you can also use envelopes, where the envelope will catch up now with price if we go sideways, and as soon as it closes underneath the bottom part of the envelope, to take that short. The reason why I like to wait for confirmation is the following. If price, for instance, comes down, we break that trend line, and price is on the other side of this trend line here, I can now work out where to place my stop. The stop will have to be on the other side of that high there. Let's just put the trend line back. So price closed underneath. Yeah, we closed here. Remember, wait for the candle to close. So price closed here now. So what I can do now is I can work out a potential stop. So my stop in this case will be about 27, 28 pips. For possible gain, about 38 to 40 pips to the first roadblock area. Why is that a roadblock area? Because it's a psychological level at 1.1300. There's a weekly pivot point, and it's also a 38-point fib. So that is our first roadblock area. But this is why I like confirmation. Now, sometimes Mark will take trades without confirmation, and he will make 20 to 30 pips more per trade. But I've also learned over the years that that can also bite you, especially when you start calling tops and bottoms, where people just get in at previous support resistance areas and then hoping for the best. Now, that was the euro US dollar. Okay, Lisa was asking, how would you manage to trade at the first roadblock area? Lisa, if the price drops, we got confirmation. I want to see what price is doing here, okay? And what I mean about that is I want to see if price is slowing down here. Do we have big candles coming down, and then all of a sudden we've got smaller candles, doji candles, spinning tops, even bullish engulfing candles again in this area there. That is telltale signs that we're finding support there, and a possible pullback can happen, okay? Then we also need to look where we are in the market during the week. Is it close to Friday? Are we still on Wednesday? Is it close to news? Okay, in that case, I will either move my stop then to the other side of break even. Let's call it 5 pips in profit and let it go. If it struggles here, I will pull it. I will pull it manually and then start looking for new trades for the rest of the week. But that is the first roadblock area, and then the main areas will be at 1250 and then further down here. But that is definitely a big roadblock. We can see our price previously found support there, and it broke, pulled back, and we broke that resistance. So that resistance broke to the upside here again, and resistance now turned into support. So that can be a big level here. Okay, Mark and I had a chat. Fundamental wise, we are still short in the euro US dollar, okay? But we have to take this support level into consideration, because that can be the first roadblock. You're welcome, Lisa. Okay, so that is that. Euro JPY, let's quickly now everything, put the cat between the pigeons here. Let's take that away. Come on, man. Okay, my red box doesn't want to go there. Now, if we quickly have a look here at the Euro JPY, remember, Euro US dollar, Euro JPY, Euro pound are clustered together because they correlated. Then I put all my pounds together, all the Aussies together, and then the rest of it. Now, if we quickly have a look at the Euro JPY, we can see the trend is long on the 4 hours, short on the daily. The main trend is still short. So now we can't flip the 4 hour for a short zone. We have to see if we can flip the daily to get a short zone. And the problem is that that is the high, that is the low. So we can't flip the previous month to get a short zone. So now we purely had to look for a plan B area. If we want to trade with the trend that is short, we need to identify new areas where possible resistance can happen, where we want to short. Now, if we purely look at the daily chart here, then that is the obvious area here. 127.64 is where we have a monthly pivot point, is a 200 EMA psychological level. What is the rule? Always look to the left of the chart. We can see that was previous support that broke to the downside, so that can turn into resistance now. So we will keep our eye on 127.64 going up to 128 for resistance for possible short. Now, saying that, the following can also happen. We've got a lot of EMAs here and a weekly main pivot point that can give support. If we don't get to this area up here, price can break this area, and this is where Mark's M2 comes in now, where important level broke, price pulls back to the level. Now you look on the smaller time frames for confirmation to short from that area, going like that. So that is an M2 short on that one. Just getting back, guys, to the Euro US dollar. This is, I flagged this one. I will be interested in this one. Euro JPY, not that hot for me. If I look at the euro pound, we're a little bit wary of all the pounds. So I'll flag the ones that's hot for me at this moment. Okay, so the euro pound, same thing here. We have to start with the direction indicator. The 4 hour is short, the daily is short. Last week we closed 136 pips lower. So everything is red here. So we're good to go. We can FIB 4 hour. So we FIB 4 hour from the high to the low to get our zone 8573 going up to 8624. Areas of interest for me. There's not a hell of a lot going on in the Earth and Sky trading zone. I prefer to see pivot points there, 200 EMA there, 55 EMA. At this stage, nothing. So that's warning signs. But look at this, the 55 and the 50% yesterday. Look how price broke to the other side, and take note of the wick there. So price went to the other side, and this 4 hour candle closed underneath the 55 again. Now, if you see a big wick like that, that's warning signs that there is bearish pressure here. And we can see that. So obviously the 55 is a problem here. So possible shorts at 8565 going up to 8573. Okay, but be careful with this one. If for price for some reason breaks the Earth and Sky to the upside, remember we've got nothing here. We look for multiple reasons. We've got only a little bit previous support resistance here. Then there's a plan B area where there's multiple reasons. We've got a weekly pivot point, the 200 EMA, and the previous week's high. Now I call the 200 the mother-in-law because you can see price just don't like the mother-in-law. Like here we see we're way out from 200 EMA here as well. But once in a while, wife equals price tells us that we need to go and visit the mother-in-law. Look how we went and visited the mother-in-law there, had supper, and then we left again. So yeah, we're way out from the 200 EMA. So if we do break, yeah, then we might go and visit the mother-in-law. So that is that. The pound US dollar and the pound JPY. Mark and I'm not touching this at the moment, but just for education purposes, let's have a look at this. 4 hour long, daily long. Last week we had a big move. We closed 327 pips higher than the opening. So here we FIB previous, we can FIB 4 hour from the bottom to the top. Our zone 3170 coming down to 3065. Now what do we need to do? Can somebody call me possible areas where price can struggle, where we can find support for possible longs? Just drop it in the inbox there for me. The 200 EMA, that's correct. Nice, Lisa. Maya, 200 EMA. There's a roadblock before that 200 EMA. What is that roadblock? A potential roadblock. Weekly pivot point and the 55. Well done, Pat. Clinton, well done. Weekly pivot point. Lisa, weekly pivot point. Maya, 55 EMA. There we go. We want to go long. Main direction is long, okay? This is the Earth and Sky trading zone down here. In the Earth and Sky trading zone, we've got first support at 3100. It's a psychological level and there's a 200 EMA. If that breaks, then we've got another support area here at the daily 200 EMA, daily 55 EMA, weekly pivot point. So anything between 3095 coming down to 3039, we can say is a big support area. But before we get there, we've got a first roadblock in this area here. Why is it a roadblock? Now, I don't like the 38.2 FIB to stand alone. We need multiple reasons. Do we have multiple reasons at the 38.2? Let's have a look. We've got the 38.2 FIB. We've got a weekly pivot point. We've got a 55 EMA. We've got a psychological level. We've got previous support resistance. That is multiple reasons, and that is why we can't ignore that level there. So possible support can be at that level, go long again. If it breaks, then we keep eyes on that bottom area there. Now, pound JPY is correlated, and yeah, exactly the same thing. 4 hours long, daily is long. So yeah, we had a decent move last week, so we can FIB the 4 hour from the bottom to the top. Here too, there's nothing in the Earth and Sky trading zone except maybe for the psychological level. But here things are starting to get interesting. We've got two mother-in-laws there. We've got a weekly pivot point, psychological level 55. So that is multiple reasons in that area. but we've got a roadblock that we need to keep our eye on at the 55 psychological level, weekly pivot point, 58.2 for previous support resistance. So we can't ignore that one there. Now this one is one that I've interesting. So we've got Euro US dollar and then Aussie US dollar. Aussie US dollar, 4 hour is mixed. The daily is short. Last week we closed 52 pips higher in the opening. We can't flip the 4 hour for a short zone. We have to flip the daily. So year two, we flip daily from previous high of that month to the low. Then our zone starting at 7,143, going up to 7,213. Okay. If we look in the Earth and Sky trading zone, we've got only a monthly pivot point, Bollinger Band psychological level. Okay, so that is in the Earth and Sky trading zone. We identified 7,143, 7,178, psychological level of 7,200. But here is a problem area. Why is it a problem area? We've got multiple EMAs there. We've got a 200 EMA there, which is the daily, we're on the daily chart, so that is the 4 hour 200 EMA. We've got a 54 EMA there and a 55 EMA. So we can see price already slamming in there, and there is our first spinning top here, red one there. Okay, so that can be our first resistance area. We need to take note of that. Possible shorts can set up there. If price for some reason gives us the middle finger and we break right through this area, you can attempt to go long, but that will be against the main trend. Remember, where there's a break, pull back, and then the M2 long. But if you want to stick with the main trend, then our next area of interest will be between 7,252 going up to 7,284. Why? Because that is a monthly pivot point, 200 EMA, last month's high area. Now let's quickly have a look at the 4 hour. Look how prices both slammed into 7,111. We can see that we are busy making a triangle. So we want this triangle to break to the downside for our short, because remember, we want to trade with the main trend. Now possible profit take areas, look at where the pivots points are. Remember, pivot points is the football field for us. 7069, 7040, 6998. Look how that pivot point holds hands with that previous support. Look how that pivot point holds hands with a psychological level, last week's low. So that area there. Okay, take notice of 7069. Price might slow down there, but main profit takes 7040, 6998. Remember, pivot points, important for me. Aussie JPY daily chart, 4 hours long daily short. Problem, last week we closed 93 pips higher than the opening, so we can't flip 4 hour for short zone. We have to look at the daily. Year two, the daily already took that high out there. We can't flip it, we're going sideways. By the look of it, we're just camping out here at the support at 7898. I will prefer if we can get to 8007, 8047 for possible short. Why? Psychological level, monthly pivot point, 200 EMA there. Yeah, we're just going sideways. I don't like it when we are whip swing through EMAs, and we've got a cluster of EMAs here where price just doesn't respect that. So then we will prefer a plan B area, and that is it up there. Aussie New Zealand dollar. Going to take everything off here. Okay, guys, let's do this quickly together. Aussie New Zealand dollar, where do you start? What do you need to flip, and why do you need to flip it? Surrender, daily, well done. Why do I need to flip the daily? Less than 50 pips moves, well done. Only 6 pips, that's correct. Well done, Lisa. Well, this is it, guys. You start with the direction indicator. If we look at that, we can see 4 hours red, daily is red. Problem is that last week we closed 6 pips higher than the opening. So price was closing higher than the opening. We want to look for a short zone. So now We can't FIP the 4 hour because that closed 6 pips higher than the opening. So we can't FIP previous week for a short zone. We have to FIP the daily. And if we do that, we look at the daily, we look at previous month's high. So we FIP from the high to the low. That's our short area. Our short area is between 1.0422 going up to 1.0487. Areas of interest for us. There is a 200 EMA, which is the 4-hour 200 EMA. That's a 34 EMA. That is a monthly pivot point. We've got a 55 EMA there. We've got a Bollinger Band there. And if we look to the left of the chart, previous support, that can turn into resistance that holds hands with all that. So that is an important level for us. 1.0445 for possible resistance where we would like to go short if price slows down there. And there goes my FIP. So that will be the area where I want to look for resistance, to look for shorts again. US dollar, JPY. If we quickly have a look at this one, this is another one, Lisa. Why do we have to FIP the daily here if everything is green, even on the 4-hour? Okay, the problem is 48, that's it, not 48 pips. Remember, we've got a minimum requirement of 50. If we didn't move over 50, that means we're very flat. 4 hours long, daily is long. We got a 48 pips here, so we are less than 50 pips. So we can't FIP the 4-hour, we have to FIP the daily. We FIP previous month from the low to the high. Our zone between 110.43 coming down to 109.57. Areas of interest in the open sky trading zone, nothing really. We've got a weekly or rather monthly pivot point at the 50% FIP and then further down the monthly pivot point. Problem is, what is happening here? Price has been respecting all these EMAs now for almost a month. So that is an obvious support area. So while that holds at the psychological level of 111, look at that, at the 58 point FIP, we need to, there's a 55 EMA, there's a 54 EMA, 200 EMA, so lots happening there. So while price keeps on finding support there, we will keep on looking for longs. Currently, it looks like we're ranging between 112 and 111. Last month, we were ranging in this area here between 110 and 111. Now, we're on the other side of those EMAs. So while it holds, we will respect that and look for longs on that one. US dollar CAT. Problem P. 4-hour long, daily long. Year 2. That is the problem for us. We close 70 odd pips, 79 pips loaded in the opening. So we can't FIP the 4-hour for a long zone. We have to FIP the daily. Our problem is because we closed lower than the opening, we have to go to the daily. And if we go to the daily, we can FIP previous month from the bottom to the top. Now I'm just going to go to the 4-hour so that we can see the zone better. And we've got a support zone in this area here. Starting at 3267, coming down to 3167. Now, before we get to that area, we've got a problem here. That is a 200 EMA, is a 55 EMA. It's a psychological level. We can see out last week how we burnt fingers there. Okay, so there's nothing really in the open sky trading zone except starting only here at the 50% FIP, 3268. We've got a pivot point there. Then right further down, we've got a second pivot point at the psychological level. And then right down here, we've got a 200 EMA at 3169. But this is the first possible roadblock area for us. Multiple reasons. Psychological level, 200 EMA, Bollinger Band, 55 EMA. So we can't FIP, or we can't ignore that area there. Sorry guys, I'm just trying to read some notes here. Okay, somebody is asking me the question, can we only FIP the 4-hour when we had a 100 pip move? No. Look at the direction indicator. If we quickly look at this, that needs to be over 50. So if we had a drop, say for argument's sake, the trend is short, and we close minus 50 or more than minus 50, then you can flip the 4 hour. You don't have to wait for 100 pips and more, okay? As long as that is more than 50, either minus 50 or above plus 50 to flip that areas. Is that making sense for you? So that is important, yeah. Like for instance, in this case, we were less, 48, less than the 50. The trend is long, 4 hour and the daily. Now if we don't flip the 4 hour, we look rather on the daily for possible support to go long. I hope that answers your question. Okay, we did the US dollar CAT. Now, US dollar CHF daily. Now Mark and I've been trading this a while back, and what we noticed with the CHF pairs is that the swap is flipping huge on the CHF pairs. So be careful when you trade any of the CHF pairs, because swap can be a very big rollover. Okay, so why do we look at the US dollar CHF? The US dollar CHF is negative correlated with the euro US dollar. So it means it moves in the opposite direction. So if we want to trade the euro US dollar and we want to short, we go and have a look what the US dollar CHF is doing. If we want to short euro US dollar, then we need to find resistance. So that means the US dollar CHF must find some kind of support. So we're still going to do the same here. Let's start off here. 4 hour is short, daily is long. Last week we closed 50 pips lower. Okay, so now we can see the trend is up. Can't flip the 4 hour because that's red. We close also 50 pips lower than nothing. So we flip the daily from the bottom to the top. Our zone 1023 coming down to 09972. In the open sky trading zone, we've got a 200 EMA, 34 EMA, psychological level, weekly pivot point 55. Price gave those two EMAs the middle finger, and we're currently at that area there. Okay, so that is an important level for us. It is also a whole number, 1.000. That is huge. If price finds support there and turn around, then that short can set up for us on the euro US dollar. Can you see how we use the US dollar CHF to give us confirmation to go for the euro US dollar? Okay, cool. So let's just go back to that. Saying that, if the 55 breaks and we tumble to the downside, we've got a plan B area. Last month's low, 200 EMA, psychological level, monthly pivot point. And look now at the euro US dollar. We've got the same situation here. So let's play devil's advocate here. Price gives my open sky the middle finger. We've got lots of news, and for some reason, we are jumping to this level. If price slow comes here and we hit here, then price will be most likely be in the support area here. So if we slow down here and there's confirmation to go long here, then that gives us more confirmation to take the short end from 1494 in that area there. I think that is it, Mark. We quickly need to look at some of your charts and the other pairs that we are looking for to trade this week.
Okay, just let me change screens. And where's my buttons gone now? My buttons have disappeared again. Here we go. View options. Stop.
Alvin says we are in the euro US dollar in a daily descending channel. And then also Daniel is asking, who's at the gate? Daniel is asking, is it good to place an entry on Asian session? I'm going to leave you to that and go and have a look who's at the gate.
Okay, guys, just can you see my screen, please? Can you just somebody say in the box, this pair has disappeared. Can you see my screen? Yes, thank you, Lloyd. Okay, a lot to get through this morning, and the first one is this New Zealand dollar Swissy from last week. And Nita was asking me why we were trading the Swissy, because as you know, we usually avoid it, but it was of that, and I think it was the New Zealand dollar yen or Swiss yen seemed to be the best setup. I showed you in the live session last week, price was coming up to this area here, and it was a huge area. We had a situation where it was coming up to a monthly 55, it broken a recent high, but this was the next high, and I went into detail. So if you missed the session, then check out the recording from last time. But if you look to the left, it previously stopped here as well to the pip. It spiked through and then it pulled back down again. So what I did was I placed an entry. My bias was to short. And this ties in with a question from, I think it was Samir, asking me about breakouts, and I'll go through that in a moment. Normally, I trade breakouts and pullbacks. There haven't been many this year at all, and therefore I have been swing trading. And this is known as swing trading, and it's picking tops and bottoms, as Pierre said. What I have been doing of late is if price comes up to a very big area, instead of placing a stop, I am hedging. And what I did here is I placed 2.4 lots to short the New Zealand dollar Swiss at 69.20, and I caught it almost to the pip. I prefer to do it like this. Pierre prefers the confirmation and it's make a move. I don't like to do that because often you will miss 30, 40 pips. The other advantage that I have with something like this is that if I'm placing a stop, then I can often get away with that extra 30, 40 pips stop. So what I did last week is I placed the entry at 69.20, but because I was a bit concerned it might spike, but my overall bias was still to short. And my bias was based on as well the New Zealand economy, and fundamentally I felt that it supported the theory that this would be the area to short. So what I did is I placed a short order at 2.4 lots here. I then hedged it, and hedging is not for rookies and it is not to be used intraday, and I only do it, and I've only started doing it recently because Pierre does it quite often. I only started doing it at major areas of support and resistance, and that ties in with this position trading that we're doing where we're looking for trades from longer time frames. So that was the plan, 2.4 lot here. Then my thinking was, well, if it spiked up and it went just above this area here, there was also a pivot in place here, I believe, that Pierre flagged up to me. So I placed an order for one lot, I believe it was, 69.45, one lot here. So my thinking was if it spiked up and then fell back down, like last time, I would still be short 2.4 lots and long 1.4 lots. One lot. So I'm still, every time that the move goes down, it is still in my favor. Then as a final stop for me to cover myself in case I've got this wrong and it's going to go long, I had another buy stop up here. And again, it was up above that recent spike and it was above another pivot point. So the thinking was, well, okay, if it goes up to here and it drops, I'm still going to be in profit. If it goes all the way up here and this one fires, now my bias has changed because now I'm thinking this is a breakout followed by a pullback. And that then is the question that Samir was asking. And I say, we've not had many of late. And this is why if you trade full time and you find that things are not going the way that you plan, you have to be flexible, that we talk about all the time. So I am not particularly a swing trader, but I have found it to be very profitable recently because the market is range bound with a lot of the pairs. So what I am looking at with this kind of thing, had this broken out from here, ignoring the fact that I'm in this hedge, but from a completely different trade, this is a major area. So I would want this to break and close on at least a daily candle above this area. And the reason why I want to close is because a lot of people would have dived in here buying at this area, and then it would have suddenly shot all the way back down again. So it is my form of confirmation. So I would want a breakout with a daily candle close, then a pullback to the area, and then take the long here. So that is the whole principle of breakouts and pullbacks. And you can take them from breaks of horizontal support and resistance, diagonal support and resistance, sometimes from EMAs that you would take them as well. Now, another thing to note here, I only take a trade if it's got the potential to make at least twice the risk. So here, you could say on here, okay, numerous occasions, this went through, and therefore you might be looking for a pullback to buy this pair. The problem there was that the new high and the big monthly EMA was only 20 pips above. So the probability on something like this, had it just come back down and I wanted to long it, where would I have placed my stop? I just don't have anywhere that I can see on here where I would want to place the stop, and the potential reward was rubbish. So I wouldn't take it. Here, because I would wait for confirmation, it saved me taking a loss. That saved me taking a loss. That, and that saved me taking a loss. Here, I wouldn't take it because it's only 20 pips. So the point is, you need a clear break of an area. You then want to pull back to the zone, and then you take the buy. And that way, it avoids the fake outs, or helps to avoid fake outs. And also, I say, it gets you in easier. Because if I took this trade from up here, for example, if I wait for the pullback, then I get in 20 pips easier, and I have smaller stop, and therefore my lot size is bigger, and I get into profit quicker. So with this one, what happened? I got in here, and there was some news, I believe, last week. I can't remember now, and it dropped like a stone. So once it started to drop, I hadn't even got to any point on this one, got into a losing situation. So as soon as it started to drop, and I think it gone about 50 pips and broke this 200, which was a concern. But as soon as it broke that, I then cancelled the two buys, and I put in a physical stop. And I put the physical stop. We entered at 69.20. Initially, I put the stop at 69.18. So if it came back up and took me out, it would not show as a loss because of the spread. And therefore, at that point, it was risk-free. Now, then we had 2 days of big movement on this pair. And I think the average is about 50 pip range. It did 40, did another 40, 50. And I started to get twitchy bum time, and I got out down here. So in actual fact, the entry was almost perfect. And the exit, although it went a little further at one point, and I'm no doubt Pierre was saying, you got out too soon, it only went another 10 pips, and then off it went. So I was out. And I think actually, I made a video for it. It's in the members area in real time. I think I got taken out on a pullback. So I think it was down here, moved the stop, took me out on the pullback. So that was the result of last week's trade, and that was using hedging. As I say, you do not hedge on normal trades and intraday trades, you will lose. There's no two ways about it, and it's messy. And if you get in the wrong side of a hedge, it can take you time to get out of it. The other thing about this is I haven't traded the Swissy for years because of the debacle with the Swiss National Bank a few years ago, 2015, I think. They bankrupted Alpara UK. FXCM had to borrow 300 million, and a lot of private traders were bankrupted or certainly lost a lot of money. I was kind of thinking that, well, okay, last week should be okay, because the Swiss National Bank news is due out this week. I wouldn't take it now. The other thing to know is the swap. The swap was horrible on this. On our live account with this, the swap was quite significant. So you wouldn't want to be in a trade, a Swissy trade for long, because the swap is horrendous. And the swap is the interest that the brokers charge you on an open trade. So at the moment, I'm interested if it gets back up to here, so the same area, and then down below, my main area really is down here, but I will watch the trend line at 6,800. So we have a little trend line in place here, but as I say, I'm leaving the Swissy alone. Now, Lloyd was asking about candlesticks. Well, actually, no, whilst we're on the subject of breakouts, I found a few quickly shooting through, trying to find something for Samir. This is an example of a breakout. It is resistance, and of course, once resistance breaks on the daily candle, it then becomes support. It was 2150 area. 3 or 4 candles later, the price comes down. Remember, I always place the order 10 pips above the support line and 10 pips below a resistance area if I'm placing a forward order. But you wait for the breakout, you wait for the pullback, and then you take the trade. Then when price came back down to this area, it touched it almost to the pip again, because this now is major support, having been resistance. When it breaks down, you're then looking for a pullback to short. You also can take a trend line break. So you would look for a break of a trend line, a daily candle to close, a pullback, and a short again. So there's lots of instances for it. Again, this was 11800, so a major area of previous support and resistance on the euro. Look how many times you would have got sucked into a buy had you taken it as soon as it broke, and that avoided you losing there, and it avoided you losing there. The issue we've had at the moment is a lot of pairs are stuck in ranges We've had fake outs. I said to you the other week on the euro, be very careful shorting the euro. They are tied in with Brexit as much as the Brits are. And even though it was breaking 11300, there's just too many of them that are like this at the moment. Now, this is another chart I've just set up to show Samir. This is the Swiss yen. Ignore the fact of the currency. The principle is this. My bias on this, if it wasn't for the Swissy news tomorrow, I would short it here. This is, I believe it's 78.6 fibs here as well. This is a daily weekly trend line. It is a 200 EMA. We are clearly in a downtrend. We are getting lower lows and lower highs. Yes, it's been pulling back at the moment, but this is the major area. So from a purely technical point of view, I would short this. And I would be looking to place a stop. I would look for pivots and other things to support the theory. Maybe the recent high, but you would be looking, if you're above the recent high and the whole number, you have looking at maybe a 20 pip stop for a potential 90 pip gain down to the first bunch of EMAs. And potentially it could go 200 or 300. Conversely, if that loses, so we take the first trade, it loses. So let's say we've lost 1%. You take the next trade you wait for the breakout, the pullback to the area, because this area is huge. And this is what's going on at the moment with so many pairs. We are at or coming up to huge areas. If they break, wait for the confirmation on the daily, wait for the pullback, and then look to take the trade. CAD yen, we've been looking loads of weird and wonderful things of late. My main pairs usually are the pound, the euro, and the euro pound. I'm English, but I live in the Eurozone, so I'm quite up to speed. I could probably call myself an expert on the euro situation and the pound, and therefore those are the currencies I prefer to trade. Of late, we've been having to look around elsewhere because of the Brexit nonsense. I am interested with the CAD yen at 84.50. I would not hedge the CAD yen here because it may go all the way up here. If it gets up here to around 86, then you're looking at potentially 40 odd pip stop. And again, I'm just talking off the top of my head here now. I would be looking in more detail. I would look to the left. I would look for pivots. I would look for other reasons where price will probably bounce. But if I can get a trade here, I would consider a hedge. And you would be looking at 40 odd pips before you place the buy stop. And so 40 pip risk for the first potential reward is 150. And again, it could go 300. So again, you're looking for multiple reasons for the entry and the stop, and you are looking to make sure there's nothing major in the way to stop the trade so that you're getting at least the 3-to-1 reward, 2-to-1 risk reward. New Zealand dollar CAD, one of you called this the other week. This was the other option when we were looking in the live session. And again, it came up to 9,200, fingers in the fire, and off it went. So that was another potential one. With this, I'm a little bit more wary about hedging this. So I don't know, I'd have to decide as and when it gets there. Other options are if it comes back down here, anywhere around 90. Whole numbers are significant on a lot of pairs, and particularly the decimal tens. So 10, 20, 30, 40, 50. So 90, big number. We're in an uptrend. We're on a daily trend line. We've got a whole plethora of EMAs here to give us somewhere to hide the stop. And the potential reward for this is 200 pips. Aussie yen. This was a breakout the other week. And again, you look for a breakout followed by a pullback. I would prefer a pullback up here, all the way up here. Pierre, I know, has been looking around here the last few days. Aussie CAD, look at this, how this is stuck in a range, and this is going on all over the place. And this is why it's so boring at the minute and so difficult. But on this pair now, since the end of January, so for 6 weeks, it is just coming up and bouncing off here. So the way to play it, the area of the range is around 100 pips and possibly 160. You look for potential shorts here, stop just above the recent high, and still a decent risk reward. Aussie dollar, I'm waiting for a pullback. I prefer 7,200. And 7,200, I have multiple reasons. Again, I have the trend line that goes back. This actually goes back months and months and months. I have the fib just above 78.6 fib. We're in a downtrend, etc., etc. And again, I know some of you and Pierre have been looking on a 4-hour down here. New Zealand yen, a lot of the yen's in the same flag pattern as we showed the other week. Theory of a flag pattern, this is 700 pips pole, The theory goes that this will move 700 pips down, and people may poo-poo it, but you would be surprised how often these technical patterns do pan out. And I've shown you before, the Aussie dollar in particular seems to like flag patterns. So for me, again, if it gets up here, then this is a position trade for me. I am thinking that this could go minimum 150, possibly 200, and it could go 900, 700, 900, 700 to 800, not 900. So again, I'm just looking at big areas. But for now, we may be stuck in these ranges for the next few days whilst we wait for FOMC tomorrow evening. CAD clearly is still bouncing off 3,300, and Pierre's shown you some of the other areas he's looking at. This is the big picture. This is what I start with every week. And Lloyd was asking me about candlesticks. Do I pay attention to candlesticks? I start with a chart that only has candlesticks on. And the reason why I do it, so I can see the candlesticks, but I never make a decision based purely on a candlestick. There is a guy, I don't know if he's still doing it, Steve Neeson he's called. He used to charge about $3,000 for a candlestick course. I don't believe that it is an accurate way to trade. When you look historically at things, you can say, okay, this is the CAD, this is an engulfing candle. The whole of the body of this candle is bigger than the whole of the body of that candle at the top of a big move. So after the event, you look at that and say, woohoo, that worked brilliantly. Slight problem would be that this is where that candlestick closed. If you were going to place your stop up here, it was 600 pips away. So yes, you could have a look and try and find a better place for a stop. But as it was, look how much it pulled back. It pulled back 225 pips. I don't take anything, very, very rarely, if it's more than 80. And ideally, I want to be down 30, 40, 50 pips. But so even though that looks after the event, and a lot of marketers would say, oh, look, you know, our candlestick pattern here, you would have won a squillion pips here because this went 1,700 pips. But you would have had to risk 600. Not a good idea. Now, there is an engulfing candle here. So again, it looks as though it worked. There's a pin bar reversal here. But the way that I do this is I try to build a picture. So I start with this. I then put the trend lines in. Then I put the major EMAs in. Then I put Fibonacci in. And if I then have multiple reasons to support the theory, then I would take it. But I would not take it purely off candlesticks. Now, the CAD, I've done this exercise before. The CAD looks as though it's proving me wrong. But if you have a look at the daily on most pairs, it's not an accurate way to trade. It's part, if you treat it as part of the puzzle. I know you're new, Lloyd, and you're looking at the STT at the moment. The STT is, by definition, a simple trend trading system. And for Samir, if you're wanting to look at how to trade breakouts, then go into the members area. Where's it gone? And go to the education tab. And start here, I believe it is. So this is the STT. We say here, or we certainly say in the introduction, we don't use this on its own. I use this as the backbone of everything I do. But to the basic template that you've got here, I add Fibonacci, trend lines, and EMAs. Big EMAs are the ones I focus on most nowadays. So don't trade this on its own, thinking that this is the easy way to trade and you'll make loads and loads of money. Dean, who created this, also, as time went by, started to add more filters to it. And I also, as you know, I also filter things with fundamentals as well, because I want a bias. Lloyd says, laughing because the CAD one was a bad example. Again, Lloyd, don't treat them in isolation and don't trade the STT purely on its own. Use it to learn and understand about breakouts and pullbacks. That's what the great thing is about this, and also trading with the trend. But then when you've done that, go on to my M2 method. And my M2 method will build upon what you've learned. And Pierre's Earth and Sky, we've done this before. We were looking the other week. Pierre joined us as a member back in 2009, 2010. And he was trading shorter time frames.
Don't go there.
Where's it gone? Testimony, here we go. Pierre joined, he'd actually traded for people, hadn't you? And then got ripped off by a broker and so all sorts of shit went on. But anyway, this is a testimonial.
A lovely South African broker.
This is the testimonial that Pierre sent me in 2010. Spelling was still as bad as it is now, but his English is not his first language in fairness to him. But this was by going to these longer time frames, by stopping looking at 15-minute charts. We've both been through this process, and I went to daily in the end. I started to make money going to the 4-hour, but then we went to daily, and now I've just shown you, I start on a weekly. So I start with a weekly, candlesticks, trend lines, and then I build a picture. And all I'm looking for at the end of it all is, once I've found something, for example, with the CAD. If the CAD gets back down here, 3170, look how many times the CAD in the last 3 or 4, well, 2 years on this one, has bounced repeatedly off this area. Then you go down to the daily, and you are looking for multiple reasons. Pierre and I were discussing this morning, him on the 4-hour. I prefer the daily. So on the daily, this is the area. So I've just shown you that 3170 is a big area. Wow, I now have the 200 EMA in the area as well. And the 200 EMA is moving support and resistance. So I could think about half of a stop here, another, or go really conservative below here. But for me, that is the big area on the CAD. Alvin says, another position trade to consider is pound yen. I don't trade the pound yen, Alvin. Every time in my youth I traded the pound yen. I used to trade in my early days. I'd followed some idiot that told me to always use a 50 pip stop. You could guarantee every time I placed a trade on the pound yen, and in those days the spread was 8 pips. Screens weren't in black and white, but it was a long time ago. It would come and take me out. I wouldn't touch the pound yen at the moment because of the Brexit as well. But
pound yen's got a huge daily range, guys. So that.
Let's have a look. I may have even banned it from my platform. I still bear the scars. The CAD used to do the same thing to me, and I am selective with the CAD. I trade it from time to time, but I don't trade the CAD all the time. Pound yen, let's have a look at a chart. That's the point, guys. If you're ever looking for a pair and you can't find it, you go into here, into Market Watch, and you right click and you put show all. But when you've finished, click on hide all, because it's using a lot of CPU if you leave all those windows on. So pound yen, let's have a look. So I start with the candlesticks, just black on a weekly. And Murphy's Law now, as this is in real time, it will probably be a really good candlestick pattern. Let's have a look. Right, so this is the weekly. Here's an engulfing candle. I want it to drop now to prove me right. Please drop. So I'm looking at structure. I'm looking at the big picture. Where has price previously bounced in the past? And I'm kind of looking here and thinking, well, let's get a trend line in here. Trend lines is not an exact science. You make them fit. You are trying to think, where is everybody else and his dog looking? So I think on the pound yen, my area for resistance here is around 148.55. I seem to remember 150 was a big area on this from Pierre last time. So for me, I'm looking at structure. Is it going up? Is it going down? Or is it going sideways? Well, we're in a weekly downtrend. We have pulled back up to a major area. My bias at this moment in time would be to short. From here, I would then add EMAs. So we add 55 and 200 onto here. And we're looking on a weekly, and that trend line was coming in. Where was that trend line coming in? Somewhere around here. Ooh. So I'm not trading it, and I really, really don't recommend this with the Brexit scenario, guys, because it's got even more chaotic this week. The leader of the House of Commons, leader of Parliament, has said he will refuse to let Mrs. May bring back the deal again. And this guy, I mean, this guy's got the ego the size of an elephant. He was photographed driving a car around London and it was insulting to people wanting Brexit. Now, he claims that his wife's view and he is impartial, but he is really, really pissing off the government at the moment. And there's talk he's not going to get his knighthood, which is normal for the speaker when he retires. That would be my thinking, Alvin, at the moment. I would think I would only want to short this. I certainly wouldn't long it, even on the break of this trend line. And this is an example of what I was showing you before. I wouldn't take it there because you've got the 200 EMA is only just above. If I was going to long this, I would want this to break. And this is 150. Oh, no, it's even 151. Ugh, too messy for me. Clue to short, maybe, but not for me. Strong resistance line not broken since April 2018 is what Alvin's talking about, and then this 200 EMA. A confluence of resistance at 150, looking to short subject to risk sentiment, possible 500 pip move down. But good risk reward. Try fibbing previous week high to low. Okay, so he's saying that's Alvin called a very good top the other week on something. Fib, if I was shorting, I would be fibbing this for a long, Alvin, personally. I would be looking to fib maybe there to there. Then I would start thinking maybe 145 for a long. It's counter trend on the weekly picture, but on the daily, that might be the one. Right, we have run out of time. We thought today we wouldn't have much to discuss because everything else in general, we are waiting for FOMC tomorrow to come out. And as it is, we've gone over time. Thank you very much for all the questions and for people taking part. At Samir, I explained earlier, the reason I wait for a pullback is I went into detail. If you missed it, then go to the recording of the video. But I explained in great detail about why I wait for the pullback. Because if you'd taken this on a long, on a break, you would have lost. You would have lost. You would have lost. You would have lost. So it's that simple. I wait for confirmation. And then I explained as well that if you get in on a pullback, you stop it smaller. Righty-ho, thanks a lot, says Samir, and does Napason. It's got some emoji on there. Oh, it's hand clapping. Appreciate your thoughts, says Lloyd. No problem, thank you, says Lisa, and does Napason and Surinder. Sorry, run out of time, Clinton, but I wouldn't touch the euro-pound at the moment anyway. Thumbs up, says Bernard from Belgium, who lives in the UK, is now in Spain. And Maya says thanks as well as Alvin in Singapore, I think Alvin. Hi, Michael. And Shane as well. Righty-ho, I will put the recording in the blog later today and we will update you. We'll do a brief update probably tomorrow, but we'll do a proper update after FOMC, see if we can find some big ones before the weekend. Righty-ho, thank you one and all. See you next time.